What is up, everyone? Welcome back, crypto friends. If you open crypto Twitter or YouTube right now, you see two very different worlds. One side is screaming that the market is dead and we're heading to zero. The other side, they are silently stacking everything in sight. Today, we are cutting through the noise. No crystal balls, no hype. Just raw data, breaking news from the last 24 hours, and a chart that is screaming a very specific message. XRP is hovering right around 1.42. We've seen the drop. We've felt the fear. But while retail investors are panic selling, someone with very deep pockets is opening their checkbook. In the next 10 minutes, we're breaking down. Whale alert. Why did 230 million tokens move into private wallets this weekend? The hidden signal. The one technical setup on the chart that 90% of traders are missing. The Clarity Act. What's actually happening in the Senate and with the banks behind the scenes? Let's dive in. Let's start with the most important question. Who is buying this dip? We saw a local bottom form around 1.12 earlier this month. Your average retail trader looks at that and thinks, that's it, I'm out before I lose everything. But what is smart money doing? The on-chain data for the last 48 hours is insane. Whale wallets aggressive bought up this dip. We are talking about 230 million XRP added to whale holdings in just 2 days. But it's not just the big guys. Network activity is exploding. New unique addresses are up 51.5%. Just in the last 8 hours, we saw nearly 79 new wallets created on the XRP ledger. The translation? This is textbook accumulation. We are witnessing a wealth transfer from weak hands people, scared of red candlestick strong hands who are positioning for the next leg up. The market is cleansing itself. Now, let's pull up the charts. I'm going to be real with you, there is bad news, and there is some serious alpha here. The ugly truth. Bearish view. If you look at the daily time frame casually, it looks rough. We recently saw a death cross. That's when the short-term moving average crosses below the long-term one. Price is currently trapped below the 50-day and 200-day EMAs, which are sitting around 1.9 to 2.4. Technically, the bears still have control. Momentum is negative. The alpha. The bullish signal. But an experienced trader sees something else. It's called a bullish divergence. Look at the 12-hour chart. The price of XRP was making lower lows, dropping to 1.12. But look at the RSI, Relative Strength Index. It made a higher low. This is a massive signal. It means the sellers are pushing the price down, but they are running out of ammo. It's like a car slamming on the gas but hitting a wall. Usually, this precedes a violent reversal to the upside. We are trading inside a massive falling wedge. In technical analysis 101, this pattern breaks to the UPSIDE 80% of the time. We are sitting right at the bottom support of this wedge. A breakout here targets a 56% move upwards. Key levels to watch. Write these down. 1.35, the line in the sand. This is our fortress. As long as we hold above 1.35, this is just a correction. If we lose it, we're looking at 1.24 or lower. SPOT 1.5, the battleground. This was support, now it's resistance. We need a daily candle close confidently above 1.5. That is your confirmation signal. 1.71, the breakout. If we clear 1.71, you can officially tell your friends the correction is over. The path to 2.4 becomes wide open. Charts are great for timing, but fundamentals are what send prices to the moon. What's driving the value? While everyone is distracted by price action, the ETFs are quietly vacuuming up supply. While we see outflows from Ethereum and Solana products, XRP ETFs are seeing net inflows. On February 9th alone, we saw 6.31 million flow in. The total AUM, assets under management, has crossed 1.23 billion. Institutions don't buy meme coins, they park capital in regulated assets. XRP is winning that race. Did you catch the news about DXC Technology? They are a massive IT services giant. On January 21st, they partnered with Ripple to integrate blockchain directly into the Hogan banking platform. This isn't a pilot test, this is enterprise infrastructure. Also, Riyad Bank in Saudi Arabia just launched a sandbox for cross-border payments using Ripple Tech. Washington is moving. The Clarity Act, which would legally classify XRP as a non-security once and for all, has cleared key Senate committees. It's slow, there are 130 plus amendments, but analysts expect it to pass by mid-2026. Once that happens, US banks get the green light to hold XRP. Okay, we covered the ETFs and the banks, but there is an ace up Ripple's sleeve that nobody is talking about enough. It's RLUSD and the new DeFi ecosystem. Why does this matter? Because Ripple is done being just the payment coin. They are building an entire financial world. RLUSD is not just another stablecoin. You might think, who cares? We have Tether. Big mistake. RLUSD is the institutional dollar. Back in late 2025, Ripple got conditional approval for a US trust bank charter. This makes RLUSD the first stablecoin with potential dual-layer regulation state and federal. The game changer. Big hedge funds are scared to park billions in offshore Tether, but RLUSD? That's safe harbor. And the best part, it's expanding to Ethereum layer 2s like Base and Optimism. Ripple is aggressively taking market share from Ethereum. Remember when people complained XRP had no smart contracts? That's ancient history. The EVM sidechain is live. Now, any app from Ethereum can be copy-pasted onto the XRP ledger. And guess what they use for gas? XRP. This unlocks billions in DeFi capital that literally couldn't touch the XRP ecosystem before. Ripple built automated market makers, AMMs, directly into the ledger. Institutional exchanges like Bullish are already plugging into this liquidity. Translation: you can now earn yield on your XRP on-chain. This locks up supply and creates scarcity. The AI models and analysts agree. February is historically choppy for XRP. Average return is 5%. But the medium term is bullish. Short-term Feb-March, a retest of 1.5, 1.9. Mid-term, spring-summer. If we break 1.97, the target is 2.5. The macro view, Standard Chartered is still calling for 8 by year-end if ETF inflows accelerate. My strategy, not financial advice. Right now, at 1.42, we are sitting in what I call the golden pocket for risk to reward. For the snipers, aggressive, you enter here. Keep a tight stop loss below 1.35 or 1.2. You risk losing 10-15% to potentially make 50-60%. For the hodlers, conservative, be patient. Don't FOMO yet. Wait for the price to reclaim 1.5. You miss the absolute bottom, but you buy with confirmation, avoiding the falling knife. Conclusion. Listen, whales didn't just buy 230 million tokens for charity. That bullish divergence on the chart isn't there by accident. The market is shaking you out to buy your bags cheaper. Look at the data, manage your risk, and don't trade on emotion. I'll see you guys at 2. Peace.